Hey, this is Matt from InvestiQuant. Today is Tuesday, December 8th, 2020, and yesterday we saw the markets go quiet pretty much the entire session after trading at all-time highs the prior session. So we've been pushing higher for several weeks, a lot of momentum happening in the markets. We've gone up to all-time highs, and yesterday we started going sideways. We just traded within the prior day's range throughout the session, and then we closed just a little bit above the midpoint of the session. But overall, a pretty quiet day. The S&P had about 19 points of range, which is pretty light relative to what it's been seeing. It's been seeing around 30 points here in recent sessions. So quiet session, volume was a little bit light, and we have gone sideways after that push higher on Friday. So what I wanted to do today is look at this pattern that we've got that formed yesterday called an inside day. That is followed up by a gap down. The overnight session is currently trading lower, down below yesterday's low. So we're starting to get some selling action after the inside day yesterday. So let's go ahead and set this up and discover and see what that has led to. I'm going to select all four instruments. Setup's going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. For the opening filter, I'm going to say gap down, which just means we are opening below the prior session close. And then I'm going to go into the price pattern section. And I'm going to say that yesterday was an inside day. That's here in the candlestick section. I can just hit equals here next to day after an inside day. Next, I'm going to go into the indicator section and put us in a bull market environment. So I'm going to put us above a 10, above a 200. You can get more creative than 10 and 200. I know I use this one often. You can describe this however you want, but this is how I like to do it. So I'm using above a 10 and above a 200, and then I'm going to click View Results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down the day after an inside day that took place above a 10 and 200 day simple moving average. Historically, we've got a little over 100 samples in the S&P, 108 there dating back to 2003. We've got 109 samples in the NASDAQ, 109 samples in the Dow, and the Russell has 83 samples. And if we look at the win rates on these, you know, they're pretty neutral. There's not really a lean in either direction. The S&P coming in at 53%. NASDAQ is the weakest of the group at 47%, Dow coming in 49%, and Russell 48%. So none of these are showing much of an edge in either direction. You know, this is often a pattern that is taught about in books where you get an inside day and you gap down. That's supposed to be a signal to go short. This pattern here, at least in this environment with the gap down, is not really confirming that idea of following the down gap. It's just saying it's neutral. So there may be scenarios where that is the right play, but as far as entering at the open and exiting at the close, that really doesn't show much of an edge. It's very neutral here. If we take a look at the average win, average loss, very similar in size here for the S&P to go along with that neutral win rate. For the NASDAQ, the average loss is bigger than the average win. For the Dow, pretty similar in size. And then on the Russell, the average loss, a little bit bigger than the average win. So as a group, win rate pretty neutral, and average loss is bigger than the average win on two of these. But I'm not seeing much of an edge here, not much to be excited about with this pattern. So hopefully you found that helpful. Good luck today, and we'll see you next time.